get to some calls of the day. Right now, JP Morgan is initiating coverage on oddity with an overweight. The note highlighting the company's strong financial performance in 2024 also highlights that it's going to be introducing some new brands in 2025. This is the maker of and owner of Il Makiage and Spoiled Child, which are two beauty and skincare brands. And, you know, oddity says that its sort of differentiating factor is product discovery through AI. So it's interesting to see JP Morgan highlight this particular stock.
Yeah, they tell their clients well-positioned for sustained 20% growth as the beauty industry, they say, shifts online. They say Oddity has exceeded its financial outlook each quarter since its IPO, but beauty industry concerned, they've been an overhang. We think this creates an attractive entry point, Julie.
Yeah, and speaking of its IPO, by the way, that was in 2023 in July at $35 a share. The stock kind of surged after the IPO, then came down. And so, but as you can see over the past year, it's had pretty strong performance.
They also talk about Oddity lacking exposure to China, trading at a discount to beauty and DTC peers, despite best-in-class growth and profit, Julie. U.S. stocks closing lower as Trump recommits to sweeping tariffs. And Yahoo Finance's Jared Blickery joining us now with the trading day takeaways. Jared.
We ended the month a little bit ominously, but we had strong performance throughout the month and also when indicated with the flows. And let's get to our three things here. The first is January's a wrap. So let's just kind of go over some of the performance here. I'll show you the sector action first. And in the meantime, well, there we have it up there. Let's get to that. 7% for healthcare. Financials take second place. That's almost up 7%. XLC's communication services closed at a record today, up 10 days straight. Then materials and industrials. That is a healthy mix here. And you will note that tech closed negative. So what if the AI trade reasserts? Yeah. Well, we had the chance to talk to Mary Esposito. She is an influencer, and she's also kind of a new trader. She's been an influencer and a small business owner for 7 years. On Stocks in Translation, we get to talk to people from all walks of life and all investment levels. And here's what she had to say about this market environment.
I've adopted my strategy to instead be dollar cost averaging, because instead of investing
Warren Buffett, yes,
huge chunks of money at different random intervals trying to time it, it's like time in the market instead of timing the market. And so now I can automate my trades, and so I'm investing smaller increments, but more periodically and consistently. So I might catch a high, I might catch a low, but overall as the stock market rises, I'm still, gaining a considerable return.
So just keep feeding that money into your retirement account. And I should add, too, that we had some record flows in January. Cash, that was a record January inflow. Treasuries as well. EM stocks. Now, we haven't heard of emerging markets. We're going to touch on it in a little bit, but the list goes on here.
So end of January, I have to ask you, January seasonality, Jared.
Well, guess what we have for you, Josh? 2025 is now leaning bullish, and we're going to talk about exactly that, January seasonality, because as January goes, so the saying goes, so goes the entire year. And here's what we have here. Here's this green line. This is January positive performance. For the rest of the year, we tend to have a total performance of about 17%. When we have a negative January, we tend to have negative performance for the entire year of 2%, negative 2%. And if you take out January from that equation, just the rest of the year, February to December, guess what? 87% of the time we have average returns of 12%. And for a negative January, which is what we do not have right now, that drops to 60% with only 2% return. So looking pretty positive already for the rest of the year.
Final point from Jared Blickery.
All right, let's move it on here to international stocks. They are lit in 2025. I mentioned emerging markets before. This has been dead money for basically 2 decades. But I'm going to show you our indices year to date. And I know we got a lot of letters on the screen here. I'm going to decode them for you. GDAXI, that's the DAX over in Germany. That's up 9%. Then we have 7.7% for the CAC 40 in France. The IBEX is in Spain. That's up 6.7%. Then 6.1% for the FTSE, 5% for the KOSPI. In Brazil, we got 4.9% there. Then we get to the US. This is the Dow, 4.7%. So my point is, I haven't seen this kind of setup for a long time, but international stocks looking pretty good right now.
Very quickly, what is driving this, Jared? What's driving the strength in foreign stocks?
Believe it or not, lower dollar. And that plays into tariffs, going to be the big discussion of the year.
Thank you, Jared. Appreciate it, buddy.
In December, pending home sales fell 5.5% from a month prior after 4 straight months of increases. All 4 U.S. regions saw activity fall month over month, with the West Coast experiencing the most significant fall. Here with what it all means for the housing market, we've got Chen Zhao, who is the Redfin Head of Economic Research. Chen, great to have you here with us. I just want to get your reaction to this morning's number.
Hi, thanks so much for having me today. Yes, so pending sales did fall in December. Redfin also has a measure of pending sales that we released about 2 weeks ago, and that showed that pending sales in December was declined about 4.5% relative to November. By all measures, it seems that towards the end of 2024, housing market activity really slowed, and we're seeing that continue into the new year. I think a lot of that has to do with the fact that rates really started increasing in November and then through December as the Fed made it really clear that they were pausing rate hikes.
Now, Redfin found that the typical home is taking nearly 2 months to sell. That's the slowest pace in 5 years, and that would point to what some would call or summarize as kind of stale listings within the market. What's behind that lag?
So what we're seeing right now is this very interesting dynamic playing out in the housing market, where it is both the case that we don't have a lot of new listings, and when new listings come on, a lot of times, those that are especially priced right actually are snatched up really quickly, and it can be competitive. In some cases, you might even see bidding wars for some of those homes. But at the same time, homes that maybe are priced a little bit high or maybe not quite move-in ready, what you're seeing is that they are sitting on the market for a long time. So you're kind of seeing this really interesting dynamic playing out.
And so, is there hope on the horizon for an end to the sluggishness that we've seen in activity?
I think that the housing market is likely to remain fairly sluggish in the near term. However, there's really a lot of uncertainty this year, and a lot of this uncertainty really stems from policies around tariffs or around the government deficit, and a lot of these issues that really drive mortgage rates, whether they go up or down. And so really, depending on where we land on these issues, I think if we do see a little bit of relief in mortgage rates, we could see a decent amount of pickup in the housing market.
We've heard President Trump talk about bringing down mortgage rates and spurring the housing market. Is there anything within the president's realm that he can do to ultimately bring those results?
I think right now, if you're looking at what is keeping mortgage rates really high, I think there's a few fundamental factors. One is that the economy is strong, right? The labor market is very strong, and that's ultimately good news for American households. But that's also keeping the Fed from continuing to cut their policy rate because inflation is sort of stuck just a little bit above their target rate of 2%, and the economy is not really showing any weakness, so they don't feel any need to be in a hurry to cut. And then in addition to that, what you also see is that there's a lot of uncertainty and fear about tariffs and what that could mean, especially for inflation. And so I think one thing that, is very much tied to the administration's policies that could make a difference for mortgage rates in particular is where we land on these tariff policies at the end of the day.
Chen, thanks so much for taking the time here with us today to talk all things housing market. Appreciate it.
Thank you.
Supermicro Computer announcing full production availability of its AI data center powered by NVIDIA's Blackwell platform. So new AI data center systems powered by NVIDIA's Blackwell chips are ready to ship, Julie. Company saying the product has reached full production availability. So some good news for this name, which is good because there hasn't been a ton of good news. It's been a rough stretch.
Yeah, the stock has really been very turbulent. Of course, there were allegations by a former employee that the company had overstated some of its numbers. It was targeted by Hindenburg Research. The short interest is still about 16% of float. So you see there could be some short squeeze today. But really what this speaks to, as much as it speaks to Supermicro, it speaks to NVIDIA as well. As we know, one of the bottlenecks, one of the issues, one of the concerns about NVIDIA was its ability to produce as many Blackwell, of the most advanced Blackwell chips, as people wanted. So this is a sign that it is getting Blackwell out the door via Supermicro products. So it's helping lift NVIDIA today, as well as helping lift those shares of Supermicro.
Yep.
All right, let's look at AST Space Mobile as well. That company saying it has been granted special temporary authority by the Federal Communications Commission for testing with AT&T and Verizon. Now, a little bit of context here. This is basically they compete with Starlink, is what AST Space Mobile does. So they provide connectivity to phones from satellites in places that might not otherwise have that connectivity. And so this then raises the possibility that there will be more folks who have AST Space Mobile as a provider in the United States at some point.
I saw executives quoted saying we are now accelerating our path to commercial activity, starting with testing service with off-the-shelf cellular handsets on AT&T and Verizon networks. The reports I was reading, Julie, sort of basically means, listen, they can now, this allows their commercial satellites to provide voice and data and video capabilities, right, on AT&T and Verizon's premium low-band wireless spectrum.
Yeah, and this has been a big week for AST Space Mobile, actually. On the 29th, they announced a Vodafone contract that they're going to bring commercial satellite to mobile broadband service to customers in Europe at some point during this year. So this news today following on that news. And those shares, by the way, up a cool like 600% over the past year or so.
That's a move.
Yeah.
Let's take a look at shares of Atlassian as it surpasses earnings estimates for the second quarter. Highest intraday level since February 2022 here. Software company reports Q2 results really that beat, raises the full year forecast. Execs talking about strong enterprise sales execution, driving better than expected revenue across cloud and data center offerings.
Yeah, cloud and data center seem to be the two areas that investors were excited about here. And Atlassian, not necessarily like a household name, right? It's a software provider for companies. The stock's up about 24% over the past year. And Raymond James said that there was a continuation of elite cloud growth at scale and guidance above our buy-side bogeys. That suggests durability, says the team at Raymond James.
Not just cloud growth, elite cloud
Elite,
growth. Yes.
what could be better than that?
Really good.
Now time for some of today's trending tickers. Shares of Intel and Global Foundries seeing a pop as Vice President J.D. Vance advocates for the use of American manufactured chips for domestically built AI systems. So it seems like both of them getting a lift from that. Intel shares earlier were up even more. And this despite the fact that although Intel and Global Foundries do make some chips in the U.S., they don't make these types of chips, right? They don't make these types of advanced chips yet, at least, that Vance is talking about.
Yeah, they have been on the receiving end, though, billions of dollars, right, of grants from the U.S. government in efforts to try to jumpstart domestic chip production. I actually checked in with Patrick Moorhead, tech analyst, friend of the show, knows Intel very well, and I was asking him how he would explain this move in Intel today, and Patrick saying, listen, one, he would pin a lot of this on Vance's comments, and Vance specifically saying Trump administration will ensure that the most powerful AI systems are built in the U.S. with American design and manufactured chips. Patrick also telling me, though, he thinks there's an outside chance an activist investor could be accumulating here. Thought maybe that's another reason you could see the shares popping like we are.
Yeah, I mean, I also emailed a little bit with Jordan Klein over at Mizuho, and he said you also could be seeing a little bit of shorts nervousness in here, so that could be part of it, or maybe momentum buyers coming in as well. So sort of some technical factors in addition to maybe some fundamental hope for the likes of Intel.
Vice President spooking the shorts.
Yeah,
maybe.
President Trump taking a break from the Super Bowl last night to order that the U.S. Mint stop producing pennies. For far too long, the United States has minted pennies, he wrote, which literally cost us more than 2 cents, he wrote on Truth Social. Indeed, the cost to make a penny rose 20% in 2024 to 3.69 cents each. That's the 19th straight year that the cost to make a penny is more than a penny is worth. So what goes into that cost? Well, last year, according to the U.S. Mint, the breakdown went like this. 3 cents for the raw materials used to make each penny, the metals that go into it, 0.66 cents for selling, general and administrative costs, that's things like paperwork and labor, and then 0.03 cents for distribution through the Federal Reserve Bank system. The Mint shipped more than 3.1 billion pennies last year. That's a 23% drop from 2023. In fact, shipments of all circulating coins declined by 44% in 2024 versus 2023. Now, President Trump normally wouldn't be able to declare an end to the penny on his own. The U.S. Mint is governed by Congress. So, like many of his orders, we'll see if this one comes to fruition, Josh.
Turning to Papa John's now, investment fund Earth Capital, backed by a member of the Qatar's royal family, reportedly looking at a takeover of the pizza chain. So this stock, look at that, up about 20% in today's trade, most since March 2020. Semaphore is the one reporting this, says the investment fund Earth Capital eyeing this takeover, the pizza chain, spoken with advisors reportedly about mounting a take-private bid for $1.4 billion for Papa John. Earth manages around $200 million. Sounds like we don't know how they would plan to finance a possible bid, but moving the stock.
Right, because it's not a huge fund. In other words, they already had a position in Papa John's, just under 5% that they've disclosed last year. But they didn't, because it was under the threshold, they didn't have to give more information about what they were intending for the company. Papa John's, by the way, the stock has been an underperformer over the past year. Even with the pop today, it's down almost 28%. And so you could see why somebody would want to get involved here and make some changes at the company. So hence we see the big gains today on the back of this report.
Yeah, I've never had Papa John's, which isn't to knock Papa John's. I just live in New Jersey. It's a lot of pizza.
I have had it, but not in a long time.
Yeah.
Because
Maybe we'll try
there's
it.
lots of local pizza.
It's a lot of competition.
Tractor Supply shares are slipping after fourth quarter same-store sales came in below analyst estimates. The farm supply company did highlight it expects 2025 comparable store sales to improve throughout the year as macro headwinds abate. This company was a very strong same-store sales performer sort of last year, right? Or I should say 2023 now, and then saw a bit of a dip here. But for the full year, comp sales should rise 1 to 3%. The stock actually closed at a record back in October, but since then it's been sliding.
Yeah, I saw comparable average ticket decreased about 1.7%. Analysts point out that is actually the biggest decline in years for this name. So analysts were saying as for the outlook, that it actually aligned with the projections offered at the Investor Day back in December, but stock's down more than 4% right now.
Yeah.